So I wanted to go with you guys through the process of what I see every single morning when I hop in the charts. On Thursday, I made six grand trading GBP JPY, and I'll show you guys what a perfect setup in a PO3 or a CTR. That's the strategy I trade. What it looks like and how I made this much money. I was on September. I was in a 2 week losing streak. I lost over like -7%, and with two trades, I made all my money back plus more. Guys, how do I go for two losing weeks and then make everything back in two trades? So I want to show you the trade I took, how it was the perfect setup, and everything that was going through in my mind, so you guys can see what an actual trader thinks about every morning. So let's start off with I start every single day with the daily. I want to see how I trade the CRT or the PO3. So I trade price action. How do the candles close? How do they react to a certain level? So we can see that the previous day it closed above previous candle. So it closed below. So what does that mean? It means that price wants to keep delivering lower. And at this point, once I saw that, I know we're going from an external uh, liquidity to internal liquidity. So price wants to come back, retrace into a fair value gap or something like that, right? Then we also have this gap down here that I was eyeing. So then after looking at the daily, I go down to the 4 hour, and let me show you what I saw. So this, remember, it was a trade we took on Thursday. So then I saw this price action came down, closed below. We saw price come down, broke structure here. So what is that telling me? I'm seeing, okay, price is respecting highs. It's not taking those highs. It keeps coming lower. And then we broke structure again in New York. So again, it's telling me price wants to keep delivering low. It's not taking highs. We're looking for that internal drop liquidity. So then my model present itself. This is what I'm looking at every single day. These three candle patterns every single morning and every single session. This is what I look for. So we get the big drop. We come down, make a small high, and then we tap into this 4 hour fair value gap. Let me draw it for you guys. Boom. You can see the drawings now. Boom. So we tap into this 4 hour fair value gap. Okay, perfect. What I do now is I wait for a liquidity sweep. So what do? This 4 hour candle closes below, took out those highs. So my entry, I know it's going to be inside this wick. So what do I do now? Once I'm done with the 4 hour, I know that candle took liquidity and it closed below in a higher time frame fair value gap. I can now go down to the 1 hour, I go down to the 5 minute and wait for a breaker structure. So right here, we come up. This kind of is a breaker structure, but I want to see a real breaker structure, right? Like a higher time frame breaker structure. So we come up, we don't take the high, we come down, we don't take the high again, we come down, and what is this? This is the breaker structure I'm looking for. A genuine breaker structure, not those little sweeps up here. So then once I saw that 5 minute breaker structure, I'm like, okay, this is exactly where my model is presented itself. This is where I have to risk my 1% and make my money, right? Every single time this model presents itself, I need to take it. So that's where probabilities come in, and I need to take this model. So then what do I draw out? Now once the 5 minute break structure, I'm like, okay, I'm looking for that fair value gap, order block entry inside the wick. I know this is a little trick for you guys. Again, everything I'm trading is the 4 hour for my liquidity sweeps, and then I'm trading my 5 minute breaker structures and entry in the 5 minute. So my entry has to be inside this wick. Normally it's going to be in the equilibrium, the 50-minute range, like the 50% range. So then I'm looking above the 50% range. So let's go back to the 5 minute. Again, this is, as you can clearly see, this is above the 50% range. I have a fair value gap here. That's what I drew out. And then that's where I took my entry. So let's get my short position. I entered right there. Where is my stop loss? It could be above the sweep, or this is I put it above the second high because that's a safe. That's the safe high. Again, if it takes two highs, then it broke structure again. We're changing direction. So I put it above the second high. That's where I knew my trade would have been invalidated. It would have taken all these highs and then done something else. My model wouldn't present itself. So I put a buy limit there. And then now I'm looking for, price is coming up. So now I'm looking for TPs. I know where my stop loss is. I know where my entry is. Of course, we need to know where our TP is. So let's go back to the hourly. Let's see where are our draws of liquidity. So the next stop would be this. What I saw was this huge high time frame order block, which is, I know this is an order block because it has three things. It broke structure, it displaced with a big move, and inside of it has a fair value gap. That makes it an order block, right? So I drew down the fair value gap. That was my point of interest. And we also have this lower time frame order block down here. So then I drew both of them out. Let's go back to the 5 minute. So I took our entry, boom, came down, we took these lows, previous day lows, perfect. We got the retracement, it came inside. But bro, at this point, once it took this low, I was like, okay, stops at break even. I move my stops at break even. This is a risk-free trade. But I'm also targeting this higher time for fair value gap. Bro, I leave this running. I go to sleep now. Once it's at break even, I'm like, okay, this is a risk-free trade. I either hit stop loss and make no money, or I either hit my TP, which is 6%. I was like, I'm targeting this fair value gap. So I go to sleep. I wake up. I have an alarm in London session, so 3 in the morning. I wake up at 3 in the morning. We hit 6%, brother. We hit 6%. I was like, bro, I just made all my money back from the past 2 weeks, which I was struggling in that losing streak. I just made everything back in 2 trades. I made like 1% in a gold trade, and then this 6. Then I make everything back, right? So I make all my money back plus more. I'm looking at this. I'm like, bro, this was perfect. This was exactly what trading is about. It's about sticking to a plan and trading it at 100%. This is my model. This is what I look for every single day. And I stuck to it. I risked what I was supposed to risk. I risked 1%. And let me show you what I risked. I have it over here. Let me go to a higher time frame. Where is price? So I took this when one gold-funded account, gold-funded trader, look, amazing trading accounts, no consistency rules, no nothing. At a 100K account, I risked around $1,000, which is 1% of the account. I make $6,000 in one trade. Imagine this model presents itself at least 2-3 times a week, right? Imagine you took one of these trades. You got one account. You took one trade a month. You made $6,000. How would your life change? Crazy, right? It's crazy what trading can do for you. This is what I do every single day. I'm gonna keep posting more of these so you guys can get the routine of what I look for every single day and start trading the same way. But for me, this is a perfect trade, exactly what I'm looking for. And what am I looking for now? We took the CRT level, and I'm looking for this gap to get filled down here. I want to see this gap get filled. So what would I look for now is keep having liquidity sweeps from above, from this angle, from the internal, and keep targeting these lows until this gap gets filled. And then overall, we're bullish in GJ. So once this gap gets filled, I want to look for the external draws of liquidity. But again, thank you guys for watching, and I'll see you guys on the next trade.